Hey, good morning. Good morning, everyone. Thanks for getting here early. And good morning to everybody, or wherever you are around the world. I know we have a couple of thousand people on the live stream, so hello, wherever you are. So I have a simple message to get things going this morning. And there is a fight coming. And it's not the fight that Jack Dorsey thinks is coming. It's not Bitcoin versus Web3 or Ethereum versus Bitcoin. It's actually more important than that. I actually think the fight started in 1945, when, after World War II, we started a process of adopting a gold standard in the United States. That fight kind of really ticked off in overdrive in 1969. To me, that was what I call peak centralization, probably the pinnacle of centralization. After we built the pyramids, we managed to take a little tin can and land it on another planet. Probably the hardest thing we've done to date. Since then, starting in 1971, when we came off the gold standard, right, I wouldn't say things have started to go to shit, but effectively, we knew what was going to happen. We knew because this has happened probably 8 times over the last several hundred years. Okay? And not because we came off a gold standard, because that's what happens when you're in the middle, right, of a monetary cycle. When you come off a gold standard, eventually, right, the amount of things that you hold in a shopping cart for the same amount of money starts to dwindle, right? And since then, right, over the last 40 years, cumulative inflation has gone through the roof. At the same time, a movement towards decentralization started that no one recognized because it was happening so slow. It's literally death by 1,000 cuts if you believe in centralization, right? Large computers, PCs, the internet, and then of course, 11 years ago, we got this. Okay? So actually 10 years ago, literally 10 years ago next week, I gave the first public talk on crypto of any kind. And, but what's happened in bond markets since I gave that talk? It's insane. The amount of money in circulation, it's almost as if money didn't exist before I gave that talk, because it's all been printed artificially since that day. But there's some good news. Bitcoin is obviously going after gold. That's the narrative that is sticking. I actually thought a peer-to-peer money transfer narrative would stick first. I think the opposite is happening, which is totally fine. We'll get there. And more importantly, it's not just the big money managers that are going after it. That's fine. Nothing wrong with the money managers. But it's also small governments. Right? So I believe that the fight is a little different. And the tent, in order for us to win, needs to be much wider than Bitcoin versus Ethereum or Web3 versus Bitcoin. Right? Let me explain what I mean by that. So I think what's coming next is this movement towards decentralizing everything. And for a lot of people, it's not going to matter. It's like saying, you know, privacy and freedom only matter when your privacy and freedom is at risk. But I think the entire financial system is at risk right now. And this idea of decentralizing all the things, whether it's the money, whether it's lending, bond markets, even gaming assets, which tends to lead in many technologies. We've seen it now with collectibles. And even, you know, I think this is going to be the year where we start to think about decentralizing organizations and securities. This started with very simple tokens again, You know, we've seen it with privacy tokens and other types of tokens, but now I think you're going to see a tokenization of everything, and again, underneath this mantra of what I call decentralizing all the things, and maybe, just maybe, there's a chance that we can get out of this mess in a different way than we've got out of the same mess that human nature has created 6 or 7 times over the last 500 years. And each other time, unfortunately, the way we've gotten out of the mess is war. So can this slide, this may sound crazy, but can this slide actually be the backbone for avoiding global war in order to get us into the next monetary system, hopefully, which will be better even than the one we created? There's nothing wrong necessarily with the system we created. It's, you know, taken a lot of people out of poverty, obviously. And capitalism is simply the best of all the bad systems we've been able to come up with so far. All right, so let me talk you through what I think are going to be the couple of things that are coming next, and then how we at Abra are looking at this. The first, obviously, is DeFi. The beauty of DeFi is that it takes what worked with Bitcoin and gets us as close to eliminating all of these central trusted parties, right, that manage to screw it up as possible. Now, when you're in the physical world, you can't eliminate all trust in a system, but it's getting closer and closer and closer as we go. And that's really exciting to me. It started with lending, moving to things like insurance. I think you're going to see even mortgages move into the DeFi realm this year. Okay. I think DeFi will become the protocol for centralized banking. So banks will basically take advantage of a global network of yield-generating systems, lending systems, solutions for brokering, you know, asset security transfer, et cetera, et cetera. Right? So we'll have centralized banks, but over the next 10 to 15 years, the centralized banks won't be using, you know, the Fed, they'll be using DeFi. That's my prediction. Now, if you put it in context, first, obviously, Bitcoin and Ethereum market cap was 0 15 years ago. It didn't exist. A few years ago, Bitcoin and Ethereum were moving up the ranks versus traditional banks. Now, if you compare Bitcoin and Ethereum to traditional banks, they're larger. And I'm going to go out on a limb and say you're going to see this year at least 2 of the top 20 cryptocurrency either exchanges or platforms go after a Fortune 100 bank to buy them, not the other way around. And, well, it's not a foregone conclusion that the governments are going to allow them to do it. You try to buy a bank in the United States, the FDIC has to approve it, right? So we'll see if they let them. They may be forced to do it outside the US first, but it's going to happen. And there are reasons why they need each other, at least in the short term. Maybe not in the long term. I think the banks are going to need us more than we're going to need the banks. And by we, I mean those of us that are kind of crypto-centric. And then, of course, there's the NFTs, right? NFTs basically, what's interesting to me about the NFT space is the art is interesting. I'm an art collector. I collected baseball cards as a kid. That's super interesting to me. But what really matters the most to me is that NFTs finally allow us to encapsulate rights digitally. The idea of encapsulating rights digitally means that we don't need centralized entities, courts, to adjudicate what's mine, what's yours, what was our intent. It can be done in software, at least as it relates to things that you can capture digitally, right? We'll see how that plays itself out with the kind of physical world in terms of real estate and other things, but at least digitally, it's super interesting to me that we now finally have a way to capture rights. Now, obviously, it's starting with art, which is great. You know, you can see the volume of art being traded online, and I think it's going to explode. But I think when we show the slide in 5 years about other forms of transactions that are happening by being able to store rights, whether it's tickets, contracts, deeds, all basically forms of NFTs. Because again, as I said, an NFT is just a way to capture rights. All of this is leading towards this idea that we have a global system, and it's not just going to be Ethereum. I think there's going to be lots of parallel networks, right, that represent multiple world computers. Ethereum just being one of them, which I'm super excited about. If you're like me and you came up in the dot-com days, this takes everything I hated about Microsoft, and I'm sorry to pick on Microsoft, but it basically moves it to a model where we don't have to trust the man to do anything right. I don't like this open source dev. Well, I do it better with this open source dev. And that's what I've always wanted. And companies like Abra will simply have to innovate on top in order to add value to consumers and institutions and other people. And that's what we've always wanted, is to be forced to innovate in order to survive and have a level playing field for doing so. So lest you think that we're way into this, we are not. Right? We're just getting started. Right? So that's the good news. If you're like not sure, do I start a company in this space? Do I get involved? Where do I invest? Yes, from a digital asset ownership perspective, it's going to be very volatile because historically, people have not had access to assets in these early formative stages. It's usually just been the venture capitalists. And we're not exposed to the volatility of companies that are on the fringe of dying. And so anyway, it represents a lot of volatility in the pricing, but the upside potential, not just to make money, but to change the world on this movement towards decentralizing all the things, is enormous. And so at Abra, we believe that there are going to be, today there are tens of thousands of banks globally, okay, all basically doing the same thing. And a lot of that is basically this kind of moat that government gives those banks in order to provide the service. Nothing that they do from an innovation perspective that gives them any special privileges other than some government regulation. We think that's going to change, and there's probably going to be 100 to 200 companies that replace those thousands of companies based upon network effects, innovation, technology, and giving people what they want based upon this movement towards decentralization. And obviously, we hope to be one of those companies, and we're off, I think, to a pretty good start. So the things that are working today, and I'll give you some insight as to what I think is coming next, is obviously trading, right? We've built a trading platform. We're not an exchange in the traditional sense. We have over 140 cryptocurrencies. It's kind of one click, anything to anything. So unlike an exchange where you usually have to go back to dollars first, and then you can trade into another currency, you can literally trade directly between other currencies. And so for non-traders who want to just basically get price exposure, it's proven to be incredibly effective. Okay? And we've processed billions of dollars worth of exchange volume, basically enabling people to swap very quickly between cryptocurrencies. Probably the thing that's driven more business for us than anything else over the last 18 months has obviously been our Earn product. The deposit volume is now in the billions. You can earn in-kind 8 to 9% on Bitcoin, dollars, Ethereum, et cetera, Now with our C-Perks rewards token, it's up to 14% yield in some cases. And this has just created a frenzy and has actually stretched our ability to be able to continue to pay the yield. But fortunately, so far, nothing's broken, and you know, our risk management systems are incredibly strong. And I think that's the key here, is that we've basically innovated risk management on top of effectively what looks like a DeFi protocol, right? And that gives a lot of, particularly high net worth investors, a lot of trust that there's some people behind the scenes that are watching these DeFi protocols and making asset allocations into these protocols that make sense for them, as opposed to all of you sitting in front of a screen and saying, okay, what's the difference between this DeFi protocol and this DeFi protocol and this DeFi protocol? Right. And then there's also collateralized lending now, which is basically, I don't know, a $50, $60 billion business that didn't exist 5 years ago, which is us lending to miners. Miners are basically printing Bitcoin, making a lot of money right now. They don't want to sell the Bitcoin for many reasons, but they want to expand their mining operations. They'll post that Bitcoin as collateral. We'll lend them dollars. You get the benefit of that yield, on a collateralized basis. So they're not basically doing uncollateralized loans where you're taking all the risk. So you're actually generating relatively low risk yield, but in much higher numbers than any bank or other high yield service could possibly provide. Okay. And then lastly, we have our retail borrow, which we just launched mid last year. We've done over $1 billion in loans with 0 defaults. We have a 0% interest option. So if you want to borrow, let's say 10% of your Bitcoin or Ethereum in dollars, we'll actually give you that loan for free. And that's been a super popular service for us, because if you don't want to pay capital gains, but you believe also that the price of Bitcoin is going to continue to appreciate, or Ethereum is going to continue to appreciate, it's a fantastic option to access some of those gains in the short term. And I believe this is the future of lending. Think about it for a second. Outside the US, credit infrastructures are non-existent, right? I mean, most people outside the US don't really use credit cards. They use debit cards. Why? There's no credit infrastructure. How can I give somebody credit rating? But if you have an asset that you can collateralize for a loan, so my vision is, by the end of this year, we will give everyone on planet Earth some form, right, whether it's Apple Pay or Google Pay or whatever, an instant-on credit line for free against 10% of their entire crypto holdings. And that's the future of credit. It's coming. Right? Think about it for a second. In India, where families pass gold from generation to generation, they consider that wealth, but they don't access the wealth. Put that in Bitcoin terms, now you have a way to access the wealth without actually selling that gold that you're passing down from generation to generation. And I believe the Bitcoin will be passed down from generation to generation as well. Okay, so to make this more enticing, last fall we launched Abra Perks. We worked with Crypto Banking Alliance based in Switzerland, who launched this new token called CPerks. CPerks is already being held by hundreds of thousands of users. It's been a huge success. It's listed on a couple of exchanges, obviously listed on Abra. You're going to see it is going to become the backbone of all new features that we launch at Abra. Everything is going to be tied to CPerks going forward. We have tremendous plans for this, including banks, gaming providers, and other companies that are going to be adopting the token. And I'm really excited about it. I mean, we have had just the number of countries that have flocked to this has been astounding. And folks in India, Philippines, Bangladesh, Turkey, it just blew us away, the global interest in this. There's a lot of people in the kind of play-to-earn gaming space right now that are working on things in this space that we're also really excited about. Okay, so just to wrap it up, so we're at about 2 million customers, 85 million in funding. We just passed 1.5 billion AUM and growing strong. Back to the fight, right? So our mission at Abra is to make financial independence and well-being accessible to everyone. We want to be one of those small number of crypto-centric banks that lead us out of this current late-stage cycle that we're in. And as I said, I don't think we're really fighting for, Web3 versus Bitcoin. It's not Jack Dorsey versus Ethereum. It's not VCs versus open source devs. It's not a fight of the SEC versus the DAOs or DeFi devs, right? To me, this is a fight for freedom. It's the fight for who's going to control the internet, who's going to control your money, and who's going to control our collective voice. And at Abra, we vote for all of us, for you. And that's what we're enabling. Okay? Anyway, I hope that message helps for the day. Enjoy the day. Thanks, everyone.
Thank you, Bill.